The topic at hand today is how to calculate your stop loss. Now, having a stop loss is literally one of many very essential parts of making a solid trading plan or solid trading strategy. You can't get away without having a stop loss. You might be able to get away for like 5, 10, 50, 60 trades, but there's gonna come a time when you get screwed and you're gonna be like, damn, I should have had a stop loss. Trading is literally like a business, and you have measures in place to stop your business from going bankrupt or going bust. The same way, like if you're a sexually active teenager, you have measures in place to stop you from catching an STD. It's the same way you need to have measures in place to stop you from blowing your account, because you might place 100 trades and there could be that one trade that literally wipes 60, 80, your whole, that literally completely blow your account. There's loads of things that can completely shift the market like in an instant, and if that happens and you're on the opposite end of that trade and you don't have a stop loss, yes, there might still be slippage in a situation like that, but you have a stop loss that will get you out, instead of like you waiting until that move is like 10% up in the opposite direction and you're like, wow, I am screwed. And then you decide to hold it a bit longer because you're like, oh, it might go back down and I'll probably save a bit more, and then it goes up a bit more. Like, okay, but if I wait just a little bit more, I might see a signal that it's going to go down. I can take some profit on the next pullback, and then just goes up a bit more. And yeah, you don't want to be in that situation where when you have a stop loss, just the moment you get taken out, and if you find another opportunity to enter the trade, then you find another opportunity to enter the trade. On screen right now, we have some X marks the spot. Let's say we have some examples of how I'm going to go through how I would calculate a stop loss to say on a certain trade. So we have a few examples, as you can see. So right here first, this is a 4-hour time frame. On a lower time frame, I'm sure I'd find an entry reason around this area, because this is a line that I've used for support and resistance in the past. So I know for a fact there would be some kind of trade opportunity on here on a lower time frame. I mean, right on this time frame, we do have a hammer candle, which might not be enough to take a trade for some people, but as I said, on a lower time frame, I'm sure I can find some kind of reason in there, but we're not going to go through that. I'm going to go through why I decided to place my stop in that area. Now, in hindsight, everything is simple, but I'm just using this for now, and then I'll go over and make some live, not live, but we'll go over to this end of the chart, and then we go through how I'll do it in real time, let's say. So on here, first one, what I use down here is this tool right here, the price range tool. So the price range and the ATR. So the ATR stands for average true range. You can find it in the indicator section on TradingView. So with the ATR and with the price range tool, basically what I do, I hover the candle at the last previous high or previous low. So this was the previous high of this area that we can see on the chart anyways. So when you put the crosshair right there and you look down in the ATR section right down here, you can see a calculation. So we're going to use the first two numbers, which is like 66 or whatever it is for that one. So the first two numbers for that is 67. So you can get as precise as you want. You can literally go on here and then you'll find up here at the top, you see the highs and the lows, and you can go from there, but like you don't have to go pip for pip. So price range tool, amount 67, we go from roughly right there, we go up, we go to 67, as close as you can get anyway. 67, bam, right there, stop loss goes there. And I'm not, as you can see from this example, I'm not saying I got in a trade like literally at the perfect entry. The move is already started, and I say, okay, I found an opportunity, I jumped in, I got confirmation, whatever it is on that lower time frame. So I'm trying to be as realistic as possible. So on a lower time frame, let's say I got in there, my stops are up there at that many pips above the previous highs, and every trade that I take, I'm going to aim for at least a 2-to-1 profit risk to reward. So you can see it even gives you, it helps you to calculate your reward in comparison to risk. So obviously this tool on TradingView, the position tool, it's super useful. Based on your stop loss, it helps you calculate a decent 2-to-1, which is also like literally capturing a decent amount of the move. Now let's move on to the other one. Again, over here we have, this was the previous highs. The market went above, then break, and then retest that area. So that's what I was looking at. I mean, not what I was looking at, but I saw this and okay, I'm sure to find another opportunity in there on a lower time frame. We can see the break and the retest off a decent support, a support resistant area. And I'm sure if I put a fib on there, I'll find like a 618 or something. So yeah. And again, we got the tool right there. We calculated from the previous highs, which was around this side, 54. So around 54 pips up there. Enter the trade when we got a confirmation of a break, let's say, of the previous level. So you can see right when it broke, previous this would have been a swing low on a lower time frame. You can look at like a swing low on here as well, but it would have been a swing low on a lower time frame. So waiting for price to break and close below that level is a decent enough entry reason. So as I said, I'm trying to make it realistic as possible. I'm not going to try to put the position on there and say, oh, I would have won this trade. No, I'm not trying to do that. I'm just trying to show you how I would have approached the situation. So we have a 54 stop loss, enter the trade there, stop goes all the way up there, and a 2-to-1 again. Now you can see this trade came down, messed around a bit. They are aggressive measures that you can put into place to maybe not, because this is like when a trade gets back up to here, you're super annoyed. Imagine like getting in a trade here, you're like literally a few pips away from hitting your target, and then bang, it goes all the way back up. At this point, you're like, oh, what's the point? But then bang, you win 2%. But as I said, there are measures in place to stop, to lock in profit, or you might say if price gets within 5 to 10 pips of your profit target, I'll take profit. Like, everyone has a different trading plan, but we're not going to. It's going into stop loss. All right. So now the third example. We have a nice low test of the 53 level, and you can see price did reject that area before, and then again I waited for confirmation. So we had an engulfing candle, and then we had like maybe a break somewhere in a lower time frame. Like, okay, that's a nice area to get in. So we calculated this was the previous lows to where I entered the trade. So from there it was 64 pips. So I don't know why I have 78 on there. But yeah, 64. Yeah, let's call it right there. And go bam, and then bring this down to a 2%. Bam, and there we go. The replay tool. As I said, I'm gonna go from there. I'm basically gonna go forward and try and find a trade and show you exactly how I'd place the stop at forward. I'm just looking for an opportunity to get in. See what we have here as a 786, still a decent, a deep pullback, but you can see we have the rejection there. So we're going to go here, we're going to go for the position tool, there we go. Right here would have been previous, so we got the engulfing, we got a pullback, so we're getting entered right there. 62, so 62 from there to around there. Bam, now we got our position tool again, we're going up this time, we're entering the market around there, our stops are going there, and we're going for a 2-to-1. Bam, we're just gonna go from there. Nope, we got stopped out straight away. Oh well. To get in. Okay, we have a rejection candle right there. I don't know what's gonna happen next. Let's wait. Oh no, I messed it up. So let's go forward again and let's not make that mistake. Okay, oh, so we get a rejection candle right there. Let's see if we find an opportunity to enter the trade, like an engulfing or something like that. Yep. Price moving up after that rejection at a decent support resistant level. You can see price has rejected that level right here in the past. When I start talking about charts, man, I just don't stop. I just go in detail for everything. Let's get the tool again. Where is that? We're at 68. So we'll bring this down to 68, 6, 7, 9, precise enough. And then we're going to be entering at the top right there. So let's get our position tool. We're entering right around this region. Stops are going right there. And then a 2-to-1 around right there. Let's bring this across a bit. And let's go forward. Okay, got stopped out right there, and just as we get stopped out is another opportunity to go short. In real time, I probably would have taken this trade. Well, I need to go down to a low time frame to analyze a bit more to see if we have break and close the structure and whatnot, but based on what I can see, it looks nice and juicy. Where can I find this tool? There we go, right above the highs, which is at 58. That's not too bad actually, considering that we are going up based on this move. I don't mind taking, like, that's not even far away from wherever. Okay, actually I wouldn't have got in there. Why am I saying like I would have got in at the perfect entry? Right there somewhere. And let's bring this stops up again right there. We got stopped out. You got stopped out by that candle right there. I'm just okay. So now we get that rejection, as you can see, and an engulfing. So you can see from that. That's kind of what I look for: rejection with an engulfing, like a continuation. So that's what's gonna happen. So obviously, won one, lost one. Let's get this position tool again. 62. Come on, come on, come on. Right there. Let's get this short position tool. Boom, and we're getting in on that pullback. That's going right there, 2 to 1, and the market continue going higher. But yeah, as I'm saying, I can see the market's making like new higher highs and higher lows. So it's like I would be doing this scenario different, but I just wanted to show you an example of how to use that stop placement method. Like hopefully that is straightforward enough so you can see how I use it, and just apply it to your analysis based on if you would trade, if you'd go against the trend, because normally some people wouldn't go against the trend. So traders like this, they wouldn't take trades like that because they're going against the trend. So you can see both trades I've taken that went against the trend actually turned out to be losers. So I would probably take a 1-to-1 if I can see a decent opportunity. But yeah, it just shows like it just depends on what you trade and how you trade. But that stop method is universal. Like regardless of what strategy you trade, that stop method is universal, I would say. Anyways, you can use it in any kind of, regardless of what strategy it is. That's a basic and simple way just to have your stop placed at a safe area. The reason why most of these ones lost is like we can see that we're going against the trend, which is not ideal. The trend is your friend. You took something away from this video and it made some sense. You have a new method or a new way of placing your stop loss. That being said, I will see you guys when the next opportunity presents itself. Bye bye.